Hello, you're watching Taipan Financial News, the first internet-based financial news talk show. I'm your host, Sandy Franks. For the past 2 weeks, it's been nothing but good news for the Dow. The party started a little over 2 weeks ago when the Dow began flirting with the 12,000 mark. Then, just last week, it surpassed 12,000. Next week, will we see a Dow well above the 12,000 mark? Maybe. The focus this week is earnings. Among today's biggest names beating expectations was DuPont. It opened at a new 52-week high after reporting quarterly earnings that topped expectations. Those numbers came from higher sales and lower fixed cost. As a result, the materials sectors look on target to displace energy as this quarter's contributor to S&P earnings growth. Amgen also came in with good stats. The stock rose $1.38 per share on news of Amgen's impressive earnings. Results were better than a year ago. Last week, Kristen DeHamer, creator of Red Zone Profits, told us that we've reached a new bull market. And while that is indeed good news to many of us, my next guest urges caution. On deck with me now is Todd Schoenberger, senior editor of Diligent Investor. If you're a regular viewer of Taipan Financial News, then Todd is a familiar face, but it's proving harder and harder to get Todd on our show because we have to compete with him being invited to speak on Fox television. Todd is becoming a regular on Cashing In, Cavuto on Business, and Bulls and Bears. Todd loves to dig up double and triple digit gainers for his readers, but he always puts safety first. Todd, welcome back.
Thank you, Sandy.
The markets are rallying. Even Berkshire Hathaway is over $100,000 a share. So why not let the good times roll? Why this sense of caution?
Well, I'm all for letting the good times roll, Sandy. The biggest contributor right now to this rally has been the level of short sellers. And if you take a look, you'll see that short sellers have been covered about 50 to 75%. So, and also take a look at the hedges in the options market. They have been lifted, and you see that by the sharp decline in the SIBO put-call ratio. There are some red flags out there for investors to just be aware of right now and maybe proceed with caution as we move along in this rally.
Now, Todd, had you anticipated this recent rally in the markets?
Well, I did. Actually, we had predicted this back in June. We figured that there would be a rally off of the lows in June, and we figured we'd probably have maybe a slight breakout from the May highs. We had predicted a 4% increase on the upside in some of the more popular averages, like the S&P and the Dow. I had actually predicted the Dow to hit a 12.1 level, and I figured the S&P 500 to probably hit about 1380. I also had predicted the NASDAQ to hit a 5% on the 5% upside to maybe test some new 52-week highs. But all technical indicators are there, but they're probably showing that there's a little bit more consolidation, and we may be going through a top-out process. So we're probably not going to have a real big blow-off on the upside from here.
Now, I know you just mentioned that you made some predictions, and they came to fruition, but are you suggesting caution now because you see a possible correction coming in the market?
Well, I do see a correction. I think it's inevitable that we will have a correction. But I think a lot of this rally has to do with shorts being covered. That's the bottom line. And this is strong evidence to point to this fact is that we haven't had a lot of strong volume in the market. Plus, we haven't had a lot of strong conviction from the advanced decline ratios. So all technical indicators are there, but they're actually showing some consolidation that's happening at the top. And we are going to have a correction, but I think the magnitude of the correction is going to be determined by who actually sells.
Okay, speaking of that, let me just ask you for a minute. Let's talk about hedge funds. Don't they have a big influence over the market?
Well, they do have a big hedge fund influence on it. Hedge funds do have a big influence on the market, Sandy. But you are going to see, and here's the problem, if we are going to have any type of a sell-off, maybe you have some of these hedge funds, it's just a simple unwind trade. They want to lock in some of these profits. We'll probably see probably a correction of around 8 to 10% off of these highs. However, if you start thinking or incorporating long-only institution money, pension fund money, and if you incorporate that with the hedge fund sellers, yeah, we might be looking at a 15 to 20% sell-off off of these highs. So right now, investors need to be cautious as far as going in with both feet into the equity market.
Do you think the markets have peaked, Todd?
Well, I'm not so sure if they've peaked. This is just, if we do have a correction, it would just be healthy going forward, but I cannot say that we're actually peaking at this point. If anything, you look at history, we probably are going to have quite a bit of upside potential in 2007. But right now, if there is a correction, it's just going to be pure health, and we'll be fine in the long run.
Now, you know, the Dow's been hitting these record highs, and you're urging some caution, which makes it feel like you're raining on our parade. If this is indeed a time for investors to be cautious, what do you recommend they do?
Well, I'm not trying to rain on anybody's parade or even be pessimistic about it. We are still optimistic at the Diligent Investor. But the one thing that we do is we calculate risk-reward potential, and that's critical for any investor to do. Really, you want to know how much risk you're taking if you're actually going to be investing in the equities market. So one thing that we like to do is really calculate how much potential a possible investment will have for one of our subscribers. Just actually a few months ago, I was on Forbes on Fox on the Fox News channel discussing one of my favorite large cap companies, because I'm a big fan of large cap high quality companies, and this one company was MasterCard, and all the analysts on the show were actually laughing at me, but the stock clearly has done quite well.
Well, why did you pick MasterCard?
Well, I picked MasterCard because for several reasons. One, they have a competent management team that understands that they have a fiduciary responsibility to their shareholders. I take a look at their earnings and how they're growing, not just here in the United States, but globally. Their gross dollar volume has actually increased by more than double digits, actually in the high teens actually, quarter over quarter. And gross dollar volume is based on the amount of goods and services that are being purchased with MasterCard brands. So MasterCard I'm a big fan of because they're growing globally, they take care of their shareholders, and they've created shareholder value.
Okay, so your big message for viewers today is to be cautious, and one of your favorite picks is MasterCard.
It is MasterCard, amongst others. We have several at diligentinvestor.net, and I definitely encourage your viewers to take a look at our website for those picks.
Great. Thank you so much, Todd.
Thank you, Sandy.